Hello, everybody, and welcome to IC Markets Market Commentary. My name is Tamar Mehr from Trade with Precision. This week, the 30 years Treasury yield surged to its highest level since 2007, underscoring investors' growing anxiety over inflation and ballooning U.S. government debt. The surge led to an intervention by the Treasury Department to prop up the market. However, after initially jumping on the move, Treasuries have retraced the move back. So I want to start here with a chart of the S&P 500 because that move in bond rattled the market. So what I've got here is the daily chart, and as we can see, after pushing to a strong higher high, an all-time high, we started to retrace back the move. Now the level that I'm watching is still the 7600 level. We can see here on the weekly, if and when the market will pull back to test that level from above, we're also going to be back closer to the averages, to the buy zone, that area between the 10 and the 20 moving averages. We can see here on the weekly the strength of this level. It has been quite a strong resistance in the past before breaking strongly and closing above it. A quick look at the monthly, and we can see we're still in a very strong uptrend, still overextended, meaning there's still a distance between where price action sits right now and the moving averages. So let's move into the mid time frame, into the 4 hours, and we can see here as higher time frame are pulling back, lower time frame tend to change direction. And here we've got a downtrend, and we still have a downtrend. This could potentially turn into the next lower high on this chart, and that is why I'm looking for signs that a pullback is over. I'm looking for a change of direction on the lower time frame in the area of interest. So in this point, that would be the 7600. We can see here we had a level on the mid time frame. We broke through it, we pulled back, but we haven't got any signs that the buyers are taking over. We basically went through that level. So I want to see a change of direction around that level before looking for a continuation of the higher time frame move. The other level that I'll be interested in if the market will break through the 7600 is the 7500. If we'll move into the daily chart, we can see that this was the breakout level where the market changed direction and the buyers took over from the sellers. Next, I want to move into the chart of gold. Now, the level that I was watching was the 4400. I wanted to see a pullback after breaking above through that level to test the 4200 from above. But the market was very strong and we haven't got any pullback of that area. We just consolidated underneath this level of 4450 before breaking strongly above that level and then pulling back to test it from above. So what I'm looking for now is short-term potential opportunities on the mid time frame. We can see now that the moving averages 10, 20, 50 are all fanning, all in the correct order for an uptrend, and we have very nice convergence here on the momentum indicators. So let's take a look here on the 4 hours, and the level that I'm looking for is the little consolidation that we had here around the 45.30. We can see it was the previous swing high, the pullback to test the 44.50 from above, another consolidation underneath this level before breaking and pushing to a new higher high. And if we'll add the Fibonacci retracement of this latest move, so from the low to the high, we can see that this level is sitting very closely to the 50% retracement. And if and when the market will pull back into that area, it will also bring it back into the averages on this time frame. Another casualty of the bond rattling the market is the US dollar. And I want to take a look here at dollar CAD. Now let's start from the higher time frame, from the monthly chart, and we can see here we don't really have a trend. We went to a higher high, we moved from a lower low. We don't have the moving averages in the correct order for any direction. We do have the 20 above the 10 and 2 months of selling, and we could see the market pushing toward the lower level of 1.36. We do have the convergence to the downside on the momentum indicators. Taking a look at the weekly, and we can see it's a similar story. Had a very strong push to a higher high, and now we're pulling back. So taking a look here on the daily, with the understanding that we don't have the support of a trending higher time frame, we do have a nice downtrend here on the daily chart. So we have clear series of lower highs and lower lows. We're moving averages 10, 20, 50, fanning, and in the correct order for a downtrend, and very nice convergence here on the momentum indicators. So what I'm looking for is a pullback into the averages, into the previous swing low. We can see it has been a bit of a level in the past, but mostly it's the last place that the buyer came from and made this lower high. And I'm looking for a continuation of the move. I want to add another technical element, and that is the Fibonacci retracement. So from the latest move, from the high to the low, and we can see that we have a very nice clustering of the 61.8% retracement with this level. And even when the market will pull back to test this level from below, we're also going to be closer to the sell zone, that area between the 10 and the 20 moving averages in a downtrend. Now, I am looking for a final move toward that 1.36. However, still need to keep in mind that we don't have clear direction on the higher time frame, but we do still have momentum. Happy trading, everyone. Bye for now.